Could you imagine if money existed based on belief? We might barter, exchange goods and services directly, but money backed based on the belief or faith we put into it seems far-fetched. Money simplifies trade. It acts as a medium of exchange. For centuries, gold and silver played this role. So, we invented paper money, which was backed by gold. Gold-backed money was upheld until recent decades when Republican President Nixon took us off the gold standard, issuing in a new era of money, fiat money. Fiat money is not backed by a physical commodity like gold. Its value comes from the government that issues it. Trust in the issuing government is crucial. Fiat money only works if we put our faith in the money and government issuing it. When we were taken off the gold standard, it increased the sensitivity of other issues.
One of these issues is described of as one word: inflation. Inflation is a word that sends shivers down the spines of economists and everyday citizens alike. Simply put, inflation is a general increase in prices and a fall in the purchasing power of money. Remember those delicious chocolate bars that cost $1 when you were a kid? Inflation means that same bar might set you back $2 today. But what causes inflation? One culprit is an increase in the money supply. When more money circulates, each unit of currency becomes less valuable. Imagine a government who isn't constrained by the amount of gold they hold, printing money excessively. This flood of new money can lead to a situation where too much money chases too few goods, driving up prices. Inflation erodes the value of savings. Your hard-earned money buys less over time. It also creates uncertainty for businesses. Predicting future costs becomes a guessing game. While some level of inflation is normal in a healthy economy, runaway inflation can be devastating. It can lead to economic instability, social unrest, and in extreme cases, the collapse of entire monetary systems. Trust is the bedrock upon which fiat money stands. When trust crumbles, so too does the value of the currency. But what causes this erosion of trust? A lack of confidence in the government issuing the currency is a major factor. Perceived corruption, incompetence, or irresponsible economic policies can lead to a loss of faith in the government's ability to manage the currency. Political instability can also shake trust. When governments favor the wealthy elite, problems arise. Revolutions, coups, or even the threat of such events can trigger capital flight as individuals and businesses seek to protect their wealth by converting their holdings to more stable currencies or assets. Hyperinflation, an extreme and rapid form of inflation, can completely decimate trust in a currency. When prices spiral out of control, people lose faith in the money's ability to hold its value. They resort to bartering or using alternative currencies, essentially abandoning the official currency. In such scenarios, the government's ability to govern effectively is severely compromised, as the very fabric of the economy unravels. The year is 1923. Germany, still reeling from its defeat in World War I, faces economic chaos. The Weimar Republic, the fledgling democracy that emerged from the ashes of the German Empire, is grappling with crippling war reparations imposed by the victorious Allies. To make matters worse, the government decides to print massive amounts of money to pay off its debts. The consequences are catastrophic. Don't forget to like and subscribe now. Hyperinflation sets in, and the German mark plunges into an abyss. Prices soar at dizzying rates. A loaf of bread that cost a few marks in the morning might cost a wheelbarrow full of marks by the afternoon. People's life savings evaporate. Workers rush to spend their wages before they become worthless. The social fabric of German society begins to fray. The hyperinflation of the Weimar Republic serves as a chilling reminder of the importance of sound monetary policy and the devastating consequences of its absence. It highlights the fragility of fiat money when trust is shattered and the perils of unchecked money printing.
The stagflation of the 1970s wreaked havoc. The 1970s witnessed a perplexing economic phenomenon that challenged conventional wisdom about inflation. Stagflation, a toxic cocktail of stagnant economic growth and high inflation, gripped the United States and other developed countries. For more on stagflation, check out our other videos. This period debunked the prevailing belief that inflation and economic stagnation could not coexist. Several factors contributed to the stagflation of the 1970s. One was the oil crisis of 1973, when OPEC, the Organization of the Petroleum Exporting Countries, imposed an oil embargo, sending shockwaves through the global economy. The sharp rise in oil prices fueled inflation while simultaneously stifling economic growth. Another contributing factor was a decline in productivity growth. The post-World War II economic boom, characterized by rapid technological advancements and productivity gains, began to lose steam. This slowdown further exacerbated the inflationary pressures of the time. The stagflation of the 1970s underscored the complexities of managing fiat currencies and the challenges of navigating external shocks and structural economic shifts. It highlighted the limitations of traditional economic models and forced policymakers to rethink their approaches to inflation and economic growth. Venezuela's descent into hyperinflation is another devastating result of fiat money, money not backed by a precious commodity like gold. In recent times, Venezuela stands as a stark example of the devastating consequences of hyperinflation. Once a prosperous nation blessed with vast oil reserves, Venezuela descended into economic turmoil, marked by hyperinflation, food shortages, and political instability. The roots of Venezuela's economic crisis are complex and multifaceted, stemming from a combination of factors, including government mismanagement, corruption, declining oil production, and price controls that discouraged production and fueled black markets. As the government printed more and more money to finance its spending and cover its debts, the value of the Venezuelan bolivar plummeted. Hyperinflation took hold, with prices doubling, tripling, or even increasing tenfold within days or weeks. The currency became practically worthless, eroding the savings and livelihoods of millions of Venezuelans. Venezuela's tragic experience serves as a cautionary tale about the perils of hyperinflation and the importance of sound economic policies, responsible governance, and diversification beyond a single industry. It underscores the human cost of economic collapse and the devastation that can befall a nation when trust in its institutions and its currency evaporates.
Safeguarding fiat money is the role of central banks. Central banks are guardians of monetary stability. They maintain price stability, promote growth, and ensure financial soundness. Their primary tool is monetary policy, adjusting interest rates and money supply. They control inflation and foster growth. They act as lenders of last resort during financial stress. This was crucial during the 2008 financial crisis.
Fiscal responsibility is a cornerstone of trust when it comes to fiat money. While central banks play a vital role in managing fiat currencies, their efforts can be undermined by irresponsible fiscal policies pursued by governments. Fiscal policy, which encompasses government spending and taxation, has a profound impact on the value and stability of fiat money. When governments engage in excessive spending, running large budget deficits, they may be tempted to finance these deficits by printing more money, potentially fueling inflation and eroding trust in the currency. Conversely, fiscal discipline, characterized by balanced budgets or moderate deficits, can bolster confidence in the government's ability to manage its finances responsibly, enhancing trust in the currency. Furthermore, governments can implement structural reforms to promote economic growth and enhance productivity, such as investing in education, infrastructure, and research and development. By creating a favorable environment for businesses to thrive and innovate, governments can contribute to a virtuous cycle of economic expansion, job creation, and increased tax revenue, reducing the need for excessive spending or money printing.
Transparency and communication is essential for any fiat-based currency. In the realm of fiat currencies, transparency and effective communication are paramount. Central banks and governments must clearly and consistently communicate their policies, intentions, and assessments of economic conditions to the public. Transparency fosters accountability, reduces uncertainty, and allows businesses and individuals to make informed economic decisions. When central banks operate in a black box, Their actions can be subject to misinterpretation, leading to market volatility and erosion of trust. Regular press conferences, publication of economic data and forecasts, and engagement with the public through various channels can help build understanding and trust in the monetary authorities. By explaining the rationale behind their decisions, acknowledging uncertainties, and addressing public concerns, central banks and governments can foster an environment of transparency, accountability, and informed decision-making, ultimately strengthening the foundation of fiat money. The enduring significance of fiat money cannot be underestimated. Fiat money remains the dominant form of currency in the modern world. Its flexibility and potential for efficient management make it indispensable for governments and central banks. However, history reminds us of the importance of responsible governance and sound monetary policy. From the Weimar Republic to Venezuela, mismanagement and excessive money printing have severe consequences and can drown a fiat currency and its issuing government. The enduring significance of fiat money lies in learning from past mistakes and prioritizing stability, transparency, and responsibility. By safeguarding fiat money, we ensure the stability of our economies and societies. Like and subscribe for economics, politics, psychology, history, and more.